Yeah, morning, Tracy. We are seeing tighter financial conditions playing through the floors today. You can see that in treasury markets, where we've seen nominal treasuries up about 8 or 9 basis points across the curve. Now, obviously, supply very much the prevalent theme here, while we're seeing rising yields. And we've seen 10-year real rates on tips trading at 196 at the moment, up about 5 basis points, and making another tilt to that 2% level. But, there's talk that we've seen about $40 billion worth of issuance playing through on the investment grade side. We've taken up to about 60 billion for the week, and there's speculation we could see up to about 120 billion of investment grade paper being written out this month alone. So you can see why yields are moving up, and you can see why that's sort of moved the US dollar to an extent. We have seen the US dollar index, the Dixie, trading up to 104.90. Definitely been a trend day. We did see a bit of a blip, to the downside when Christopher Waller spoke. He's come out with comments were certainly slightly more dovish at the market margin. But generally speaking, people have bought the dip there, and it's been a solid trend that we've been seeing in the Dixie throughout the trading session. Dollar yen's really feasted on those yields, and we've seen a nice breakout there and trading up to eyeing a move into 148. Really, the big flows have been seen against the high beta plays, the Mexican peso, the Aussie, and the New Zealand dollar. The Aussie's been hit pretty hard. I think that's just generally a sort of a high beta play there. You can see a strong correlation or inverse correlation against dollar CNH and also against Chinese equity markets, probably nothing to do with the RBA itself. But I think the US dollar's benefited from that smile theory. And on the right-hand side, you saw some weak data coming out from China yesterday, the Taishan services number coming out at 51.8. Relative to expectations, and a sharp slowdown from 54.1 in the prior period. And also the European PMI numbers revised down in Spain, Italy, France and Germany as well. So the US dollar benefiting from that sort of exceptionalism story. And on the left-hand side, sort of risk aversion that played through from the Chinese equity markets, and also from a weaker take coming from European equity markets to an extent. So that smile theory really boosting the US dollar, and that's where we again playing into that tighter financial conditions. On the commodity side, you have seen crude working well. We've seen that up at 1.3%, sitting at 86.67 at the moment. At one stage, we got up to 88.07 on the active contract. I think that's probably down to what we saw from the Saudis, the comments there that we're going to see an extension to the output cuts through to December. And we saw actually Brent crude trading into $90 as well. On equity side, you've got the Nasdaq outperforming up 0.1%. Small caps that really underperformed. We've got the Russell down 2.1%, and we've got the S&P closing down 0.4%. Actually, about 17% of stocks were higher on the day. So breadth was very, very poor indeed. And we've seen materials and industrial stocks underperforming there. And also on the KRE, regional banks getting hit pretty hard, down 2.1% as well. So we are expecting Asia to open on a bit of a mixed picture. It looks like a bit of a soggy start, so to speak, at the moment.